Time for the Tesla and Palantir weekly update, and going to include Coinbase and a few other charts as well, just to see what's going on with the market in general. So we're going to just take a look here at Tesla first, and we can see that the 786 got rejected. This is a linear scale right here, and we're going to see that there was a lot of resistance this week that Tesla got rejected by. So the first one was the linear scale 786, 347.58. Then the log scale 886, 353.19. This is basically all that is stopping it from going back to all-time highs. So it's not ready yet, but it is starting to build a very nice base before it's about to break out. So we can just go back and look at the Ichimoku as well and the SMAs and just take a look that price is still above all these indicators, right? Above the conversion, the 50-week moving average, the baseline down here, it's still inside the cloud. In fact, it also got rejected by the top of the cloud too, so it's just not ready to break out. It is just consolidating in this cloud, in this zone, with the potential to break out sooner than later. We can see that over here next week, the top of the cloud is going to be around like 340, so we'll see if it can just break above that. But it looks like if price just stays in this vicinity, anywhere between current price down to the low 320s, then it can just exit the cloud horizontally and then be able to be set free towards the 886 above and get more and more bullish over time. But that's not all, right? We also hit GAN arc resistance this week too. So that's another layer, right? That green arc, nailed it again. We hit it 2 weeks ago right here. We touched it back in June. And we touched it again in May. So this is just keeps on getting rejected as resistance, 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 and unable to break above. But it's also just a normal process until it's ready to be free and clear. So in the meantime, we're just going to pay attention to that Ichimoku cloud. Just stay inside of the cloud within the weeks to come, and it'll just exit naturally and be able to break free when it is ready. So you can't force it. It's just going to be a patience game, a slow process until it's ready to break out above. And next we have Palantir. And Palantir, I want to show you all this confluence at the same time here because it just closed the week. And if you go to the monthly chart, the month of August below that 1.618, which is the 157.62. That's the log-based fib. So this is kind of important. So if it cannot break above this, it might need to go lower. And in fact, it's not just that, it's 3 layers of resistance now. You have this 1.618, you got the conversion line there around 159, and you have the green GAN level here around 160. So we have multiple layers of resistance right above, and if it cannot break back above within the weeks to come, then the likelihood to go back lower and retest levels becomes more and more possible. And next week, where would that lower level be? Well, this angle right here, we can consider our first target because going in the past, it was a major support zone that only lost it temporarily to go back and touch this green GAN level here in the 70s. So we can see that this angle right here is the first target if it can't break above. And that target next week will be around 146. And if it ever started to lose that angle as a support, then that would bring possible the baseline on the weekly chart down below around 128. So we're not guaranteed to go back down to the baseline, but I just want to point out we haven't touched that baseline since it broke back above in April. So a backtest of that could become possible if that 146 area started to lose support. So the focus becomes, if it can't break above this resistance, it's going to go to the easiest place, which is retesting support below, starting at 146. Maybe 128, maybe even a little bit lower. But is there added confluence around this 128? Let's find out. Let's switch to linear scale here. And I've shown you this chart numerous times, starting when it first broke out above this blue level. I've been showing you this linear scale chart. And there is a potential, since it broke out there and it got rejected by this 168 level, and it already back tested that 142 zone of the arc. There is that 140 zone still of the arc that it can go down to. And if you want to look for more confluence where that baseline was, well, the bottom arc will kind of align with it in maybe next week. So that could become a possibility in the future. The bottom arc is down there for linear scale. The top arc is right here around 140, which kind of like if you wick through that 146 zone that I showed you here on log scale, it could easily wick down to this arc again, which is around 140, 141. So that's kind of the zone I'm really watching for support, that 146 down to 140. At first, there is no guarantee to just go straight down to the baseline immediately, so we're going to just take it one level at a time. But I do know one thing for sure, right? This did close below support, and closing below important levels means it's probably most likely to retest lower levels again, starting at 146, maybe down to 140, maybe down to 128 in that zone. But we're going to take it one level at a time, and it's only going to happen if it keeps on failing to break this resistance level above. So we're going to have to watch that 157 up to the 161 zone. If it can't break above, then it's likely to start to retest lower, starting at the 146 down towards the 128. And next we have Coinbase here, and Coinbase, we can see that price is really just stuck underneath the 886 fib here at 318.95. And then we have the baseline right below it here around the 293. And in fact, we can just turn on the label here and take a look, and it is 293.61. So with that said, we can just take a look and see that it's stuck in a range between the 318.95 and the 293. It's been in that zone for over a month now, and it has potential to stay that way. And in fact, if you go look at the monthly chart too, that monthly conversion line is also, if we just take a look at that conversion line here, let's just put on the label, it's also the 293.61, right? So the exact same price as the baseline down here. So there is some good confluence of that between the monthly and the weekly chart. And in fact, the monthly chart looks very healthy, right? It broke out, got rejected at previous all-time highs, came back down and held some nice support, and even holding that conversion line on the weekly chart, or the monthly chart, is very, very healthy. So where is price going to be going? Well, it's probably going to be still consolidating until it can successfully break above this log scale 886 fib right here, right? The 318.95. So until it can break above that, it's probably going to be still retesting support and at least the 293. And we must pay attention to this GAN level down below as well, because that's 277. If that ever started to break this 293, then that 277 would be the obvious choice, because we could just go back in time and look, there's a previous resistance, 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 resistance. It's a very important zone that could be back tested. So if we can't break above the 318.95, there is a potential to keep on retesting support and even a little bit lower first before continuing the journey higher. So this is just a normal process of becoming more bullish. It had a massive increase, and people don't realize it, but it was a 200% gain, right? It was a 200% gain from the April lows to now. So gaining 200% and cooling off a little bit is normal. It's fine. Just be patient with it, but it can't get more bullish until this 318.95 gets broken. So in the meantime, we're just going to keep watching this 293 down to the 277 zone, stabilize in that area until it's ready to continue the journey higher. And next we have MSTR and MicroStrategy. I just want to point some things out because it actually closed back below an important fib, which is the 340.00. So if it cannot reclaim that, then it could start to flip into a resistance, and then it could continue to retest lower levels. So let's just pay attention to that 340 for a while, for all next week, the weeks to come, because if it can't reclaim it, then it might need to go lower. So how much lower could it go? Well, we put on the Ichimoku here, and actually we're going to put on the Ichimoku and the GAN, and just take a look at the confluence there. So it also closed a couple weeks underneath my GAN arc, but if it does not break back above that 340, we do have the cloud below in the 320s, 325, the bottom of the cloud right there. Next week is around 322. And in fact, what else is around 322? Well, you go to linear scale, it's the linear scale 2.618, which is 322.88, which is exactly the bottom of the cloud. So that kind of looks like it's the most likely destination. And I want to point that out because this 322 and this cloud haven't really been touched in a while. And this 322 really has never been back tested since it broke out in April. So a back test of that would be normal. But more importantly, switching back to log scale, we can just see it never touched the cloud since it broke out all the way down here. 2023, since it exploded, it has never touched the weekly cloud. It came close right here in September of 2024, never touched it. It came very close right here in April of 2025, never touched it. It came even closer right here in June of 2025, never touched it. It even came almost the closest last week, but still never touched it. So what I'm trying to say is closing below this baseline here in 344, closing below the 1.414 fib at 340 kind of indicates it does want to touch that lower level first before any chance of a reversal. So we're just going to keep watching that zone right here, 322, because there's a lot of confluence right there. There's the 2.618 linear scale. There's that bottom of the cloud that it has never touched before since 2023. So it is likely to go down there. And if it ever were to break through that support, then we would start talking about the bottom arc, which is in the 270s again, and then maybe the 1.272 at 245. But we're going to take it one level at a time. We're not going to really just assume it's going to crash because there is a lot of confluence. And since it never touched the weekly cloud, it's likely to do that before any chance of a reversal. So let's just watch 322 going into next week. Try to stay above it, and if it starts to really get rejected at 340 week over week over week, then perhaps it might even start to break through that 322 and head a little bit lower. So it's kind of important to just get that liquidity in the 320s first, and then see a recovery after that and flip that 340 back to a support, because if it can't flip back to a support, then the likelihood of going lower becomes more and more possible. And next I want to do IREN, and IREN, we can see that it did touch previous all-time highs. It nailed it, 28.25, went above it, closed below it, and it was the highest weekly candle close ever in history, right? Even back here, it did not close that high. It never closed this high before. So this is a good development, the highest weekly candle close ever. But it did get rejected at resistance kind of right where it's expected. So it's not really a surprise there. This is a normal process before trying to get more bullish. But essentially, if price does stay above this 886, then 1935, then it really is going to put these fib extension levels on the table, 69, 111, 219, all of them, right? It's possible. Staying above that 1935 means all of these are physically possible to get to. So now where are we going to look for support? Well, support, we can just put on other confluences here of the Ichimoku and just see that the conversion line is actually right down there at, let's put on the labels, at 2175. So if there were any kind of a back test, it could try to back test that conversion line before any attempt to break free, but it's not a really guarantee. We can also just take a look at the Bollinger Bands and see how they're set up week over week. And it did close above, right? It closed above that band, and riding it as a support would be a beneficial or a benefit to do to break that 28.25 above. So that's 24.80 right there, and that's kind of a first zone of a layer of support that I'm going to watch for the potential to break free of that 28.25. So if it can stay above the Bollinger Band next week, then it has a chance to break free. But if it can't, then it might go down to that 21 level again, or maybe even retest the 886, which is at 1935. So good developments all in all, but if it can't break resistance, just like any stock, if it can't break resistance, then it might need to retest lower levels. And the lowest possible that I see is maybe the 1930s for a back test before a continuation higher. So we'll watch this 28.25, break above it. It's going to be good. If it can actually continue to ride this upper Bollinger Band as support, then it has a better likelihood of breaking above sooner. But if not, then we'll look for a lower back test before the continuation higher. But either way, back testing the 1935 or not, it's a very bullish scenario before the attempt to go higher. And either way, it's looking like it wants to go to these fib extensions above in the 60s all the way up to possibly the 200s. And next I want to show you Cipher, and Cipher had a very nice weekly candle close, closed back above the 786 here at 698. We got this big previous resistance there that it's still not making higher highs over with these little wicks, but it still is in the same vicinity. So is it really technically a breakout? I would say yes, because it's been stuck under this 786 for a while, but it's not really exploding past this because of this long wick up top. There are still a lot of sellers up there. And I think the reason why kind of lies in the Bollinger Band. And if we look at the Bollinger Band, it's still not expanding to the downside yet, right? It already had some expansion before, but now it's still not expanding. Even though this explosive week up 19%, you don't really see this bottom Bollinger Band going back down again and expanding. So I think it might not be ready to go to the 886 yet, which is at 1010. I think we might need a little more consolidation in this zone. So I wouldn't be surprised if it did need to go back test the 698 again, or even a little bit lower. And if we put on the Ichimoku and the other averages too, we can see that the conversion line down there is at 650. That could be a potential possibility to backtest as well. But I don't know if it really needs to go back down to the cloud, because it already did that. It already broke out, backtested, went through the cloud, held that as support, and then broke out again. So if anything, 698 down to 650, it might just spend some time consolidating in that zone until it's really ready to really explode towards the 1010 and above. So until we start making higher highs from these wicks, especially this wick right here, which is technically around 799, once we start closing weekly candles above that, then I think it'll be on a mission to the 1010 and above. But until then, I just think it's going to spend time consolidating around this $7 zone, 650 zone until it's ready to break free.